Okay, well, the markets are fairly quiet at the minute, just waiting for a bit of stimulus. The main things that are kind of moving the market right now, again, and mainly down to Donald Trump and the trade wars. Will they happen? Will they not happen? That's really, kind of, I guess, the main effect has been on the stocks. If we look at the stocks, then really they've been heading up, in the intraday term, in the kind of longer term, the dailies, weeklies, monthlies. What we've really seen is that any time there's tried to be a dip, the market's corrected, so the market's rejected, gone back higher. And this really just comes down to Trump, his policies, his ability to control the Fed, and really the fact that the 1% are just getting insanely rich based upon the stock markets going higher. So every reason to intraday buy the dip in the stocks, and again that's been a trend that's really been worked, really kind of well for the last probably 5 years. So no real kind of other big movers that I'm looking at right now. A little bit of weakness in the dollar again, going back to those comments from the Fed saying that all these data points to that rates could be too high. Trump again coming out saying that the stock market could be even higher if you had the Fed on board, which meant rate cuts. But I guess today, which is the main focus, especially if you're over this side of the world, is the New Zealand RBNZ rate announcement. So what we were looking at really is how that's going to affect the New Zealand dollar. So again, the way that kind of you look at these things from an intraday perspective, it's looking at the longer term trend, what's happening, from the expectation, the sentiment of the market, which really if you look on a daily. We've seen the dollar break through that key kind of Kiwi, kind of psychological 65 level. When you speak to the older generation in New Zealand, they'd love to kind of say like it should be right, and 65 is a good level. And there's lots of things that happen over this side of the world that are just very different from the markets. That really kind of it's a little bit kind of different, this side of the world. I'm just sorry, it's the first kind of time I've ever done this YouTube streaming. So I'm used to just doing things on a piece of webinar software. So I'm not an old fogey, but all these things have their little quirks, don't they? So it's just tell me something about stream rate. I don't know. What does that do? Mm, I don't know. Whatever. We give it a go anyway. We'll just carry on. So yeah, getting that kind of getting to the psyche and the sentiment of New Zealand and Australia. They're embarking on new times. I mean, at the end of the day, interest rates. If you listen to again, the older generation were banging on about how tough life was, and when rates were at 20%, rates are never going to be 20% again in the history of human civilization. So at the end of the day, we've got to get used to this new idea of what rates are going to be and what the new norm is. And really, it seems in New Zealand that we're kind of getting to this idea that it's a race to zero with Australia, and that's going to bring the kind of value of the respective currencies down because there's just less demand. Obviously, with the Fed, talking about cutting their rates potentially as well, then that is something to look at because most currencies are paired off against the dollar. So from this kind of angle, you look at the daily, we get to points of resistance, the market consolidates around that 50% pivot, and you can see where the market's going to, kind of rebound to on the 15-minute and 5 minutes are actually too high. We're kind of really above that, just on that 50%, but on the 5 minutes, for the short term kind of trade. And this is what a pattern you see all the time when you're expecting something to come out from, New Zealand to either because there's quite a small market trading it, the market will generally go in the opposite direction of what the sentiment is. So we're all expecting, well, the majority of people are expecting that, because of the inflation data, that we're going to see a rate cut, and that's after this bigger than expected 50% rate cut, and quite outspoken, the RBA and this all guy. He's not really my cup of tea, but then who is these days? Unfortunately, they all seem to have a very loud mouth, and like to say what's going to happen. We all know what's going to happen because we've had low rates over the other side of the world, for 10 years. So we know exactly what's going to happen with prolonged low interest rates. That's going to mean that asset prices get pushed up, and it's going to increase the gap between the rich and the poor. End of the day, the currency comes down net, an exporter. So it's not the end of the world. So generally what you'll see before the decision is the market, kind of pushes up and really kind of, from your kind of support resistant type point of attractions, you've got nothing until 0.6 kind of 3533 to kind of get excited about. The market would have to spike quite dramatically to see that as a selling opportunity. So really, just from a kind of trading perspective, the main kind of currencies I've been looking to trade the New Zealand dollar against would be obviously the USD, but really the pound. I mean, I've been a big strong vocal, kind of commentator out there saying that, I believe Brexit will happen. There's just no reason why it wouldn't happen. It's democracy. You can't really fight against that. And it's not like the EU, the global economy is in a strong enough state to be able to take on, something as, big and brutal as as an unorderly Brexit or a no deal Brexit. So at the end of the day, not with the conspiracy theories, with Trump controlling the stock market, keeping a certain section of the population ultra wealthy. I think really, the EU and UK have cornered, the kind of the pound and the euro market, and have just been playing it, between themselves. At the end of the day, you look at the monthly kind of chart for the GBP NZD. A lot of that sell off that we'd seen, was from Brexit, but it had steadily been coming down. But the pound is still happy above 2. It's happy at 2.2, 2.3, 2.5. It was fairly happy, back in the day at 2.8. At the end of the day, you're going to think about 5 million people in New Zealand, projected by the end of next year. And how many people you've got in London alone? In the UK, 68, 69 million. So just the idea that the New Zealand dollar is going to not be able to compete with the pound is just ridiculous. At the end of the day, it's just purely fact down to numbers. So when Brexit is sorted in any way, shape, or form, we've seen that it's always a good idea to be buying the dip, buying that low value, as I've been telling people to do for a couple of years now. And naturally, when you get to high points, when the kind of my bias indicators, the market goes down. But realistically, from an intraday perspective, it's just been an easy buy at the low fibs. And this is the whole point. It's not about being right on direction. I have longs in the New Zealand dollar from way back in the charts, and that's really kind of the only long term trade I've ever really done. And that's because I live here. I earn a lot of pounds, and I've just been trading that to make more money against what I know is going to happen. So in the short term, it's all about being right at the right time. So looking at these hourly candles and maybe trading 2 or 3 longs at a time. And this is what you're going to get on the back of the RBNZ. You're going to get an idea to when the market gets these low points. Yes, you might see a dip, might be a buying opportunity. For the pound, if we see a no rate cut, then again the demand for the dollar comes in, so the pound should go down against the New Zealand dollar. And really, again, like I said, the whole point is understanding why the market's moving based upon the expectation. Is it a cut? Is it not a cut? What's the forward guidance? When is the next cut going to be if there isn't a cut? And it's just looking for that movement. It's not about half the battle about trading is understanding the technical analysis, understanding the market movement and the sentiment. But then the real key is just making money. And you can make that on the 15-minute chart or the 5-minute chart. So as I say, you might dip down to here, and that might just be a buy, and then you're out. So, you haven't set the world on fire, but, you might make 16, 17 pips just by getting down to this low point of intraday, support and value. And then as it goes back up again, you might want to sell it when it gets high intraday. It's not about where the market's going to go. That's investing. That's holding, for the trend and the overall picture. It's understanding where the market could go in the short term and just making 10, 15, 20 pips just at a decent size. So realistically, you've got, I think probably the 15-minute view would be the best one to look at them, for any kind of big data. So you've got the opportunity for the market to spike down or spike up very quickly based upon, really I think the majority of people and commentators and the sentiment of the market is that, the RBNZ are going to cut rates and then they're going to cut them twice further. But as I said, Orr's been, a little bit out there, and he's kind of decided that he could try and shock the market into stimulation by like 50 basis points. But these things take time, And you have to understand the psyche behind this. Just because people get a slightly cheaper mortgage rate, that's only when they take out a mortgage. People are on fixed. People's mortgages aren't changing right now, and he's like going to the population, go out and spend. Well, people are already spending, and they're spending on credit cards, and they're borrowing against their houses, because that's what they do over here, because wages aren't very good. So when you see a nice car or a boat out in the yard, that's paid for by the house or by credit on the house. When you see me driving my 911, yeah, I bought that with cash, money. When you see me driving around any of my cars, they're all bought with money. I don't have any debt at all. I own land, no debt. Build houses with my own money. Yeah, that's the difference. So at the end of the day, when you're talking about people going out to spend, there's only still a limited amount of the population that can. And that's the old guys that have got 2 or 3 properties, got a batch down here that suddenly, is down by the beach and worth, $1 million, because that's just what everything seems to be worth these days. So going out and spending, and trying to encourage the active part of the population spending isn't working. So cutting interest rate as low as you want isn't going to make any difference, unfortunately. And that's why the New Zealand dollar and the Aussie dollar are going to come under increasing pressure for me, because they are going to start talking about and doing unconventional policies like quantitative easing, and it's going to come because the world's obsessed with debt, and it's just the way it's going to happen. So at the end of the day, I just see only negativity. So again, New Zealand dollar popping up against the dollar here. Intraday we're looking for high points, so maybe you see a spike. I don't think, as I said, we'll get to that level up here. Maybe a spike to break these tops. Then I'll be selling every high, regardless of if the RBNZ hold today. I would still be selling every high, because the overall picture for me is that business confidence is terrible and going nowhere, and it only takes a tiny shock in a tiny little economy like this to have big repercussions. So again, the pound can sell off as much as it wants against the New Zealand dollar. We're primed on the technicals for a buy anyway, and I'd just be selling every top in the New Zealand dollar, even if they came out and said that we've cut now, we might not cut till next year. I still think you're limited to get back to that 65 against the dollar, and it's still going to go low. So that's just my thoughts. That's how I'm going to be trading it in the next half an hour. Again, I generally have a particular bias, so I'm happy to sell the New Zealand dollar high or buy the pound low. That's why I've only got the 2 screens on. Mainly, this is for the kind of this side of the world, the kind of Australasia market. I have really much interest in New Zealand traders, so I'm kind of just I'm steering clear of them, to be honest. Let them stick to their property and what they know. I'm going after the Aussie traders, the people that are in the morning now that can have have a go on the phone, or have a go on their just kind of laptop if you're at home. And I think it's a big market for me, and I'm not sure how to crack it yet. But again, I've got thousands of traders in the UK. I've been over here 2 years now, and I haven't really bothered that hard to try and find them. But I am now teaming up with Black Bull Markets, and again, it's just my iView chart setup. That's again, that's going to be available if you open an account with them. This is just a demo account. I'm not pretending that I'm trading big money on this particular thing. It's there's plenty of me on Google. I'm the real deal. Don't you worry about that. So there's plenty of stuff if you just Google me. But this is my first kind of dipping my toe into showing people what I do in a kind of afternoon session, how I kind of think about the markets and setup, then how you can make some money. So you're going to be slapped with the same kind of regulations that the EU were fairly soon in Australia. So the ESMA regulations that cut leverage down to 30 to 1 from 500 to 1. Killer for my traders. The majority of people I deal with now in the UK are retail pro, 200 to 1 leverage, and the majority of clients that I mentor are millionaires, and they always have been. But I'm looking for a little bit more kind of those who want to give it a go. Anyone who's got maybe $10,000 wants to do a bit of trading. Again, if you want to get out of Australia, if you have people like IC Markets, Pepperstone, they're going to get slapped with these regulations. You've got to get your leverage cut. So New Zealand, for a lot of reasons, was why I made it my home. I'd never been here. I just moved here because of the up and coming regulations and my business model, and the fact that I wanted land, and the fact that I didn't want to live in the UK, and for many other reasons. So if you do open an account with Black Bull Markets, you get my iView charts, which is this whole setup you see, your automated technical analysis. As I say, I've got hundreds, maybe maybe 1,000, maybe more people using it in the UK, and you can get my mentoring, get my help with the same time zone. That helps, and I can show you how to make money in these markets because, again, a lot of people get into that investing mentality, tie up the capital, leave money on the table, and I'm more about getting involved. Fast paced, in out, buying, selling. You maybe only trade 15 minutes, half an hour a day, and you can make yourself a good living. As I say, I'm not shy about how much money I've made over the years. But there we go. As I say, don't know how it's going to turn out. My first ever YouTube live, although I've done 1,000 webinars in the past, hundreds of live trades. I'm trying to get, up with technology. So give it a go. As I say, if people want to give me any feedback, I'm not a difficult man to find, but I'll try and be a bit more refined next time. But this is just the first kind of eye-opener that in half an hour's time, there's going to be 50 pips out there to be made, and that could be a couple of grand for the day done in 15 minutes. So that's what I'm all about. Go to steveruffley.co.nz for any more information, or just Google me. As I say, there's plenty of pages there and contact details. And that's it. Take it easy. Good luck.